Are you considering a DSCR loan but unsure if it's the right fit for you? In this video, we'll dive into the world of debt service coverage ratio loans and explore the benefits and drawbacks of this unique financing option. From understanding how DSCR loans work to weighing the pros and cons, we'll give you the inside scoop on whether a DSCR loan is right for your financial situation. Whether you're a real estate investor, entrepreneur, or simply looking to expand your financial horizons, this video is for you. So let's get started and find out if a DSCR loan is the key to unlocking your financial goals. Did you know that a DSCR loan allows investors to qualify for financing based on the cash flow of their property rather than their personal income? This could be a game changer for many. If you're involved in real estate investing, you've probably heard of DSCR loans, but do you really know what they're all about? In this video, we're going to dive into the world of DSCR loans, debunk some common myths, and explore whether they're right for you. One of the biggest misconceptions about DSCR loans is that they're only for big-time investors with tons of experience. Not true. While they can be a great option for seasoned investors, they can also be a fantastic way for new investors to get in the game. Another misconception is that DSCR loans are only for apartments or commercial properties, but that's not the case. They can be used for single-family homes, condos, and even mixed-use properties. Some people also think that DSCR loans are only for flippers. But again, that's not the whole story. While they can be a great option for flippers, they can also be used by buy and hold investors who want to hold onto their properties for the long term. And finally, some investors think DSCR loans are too complex or too expensive. But when you understand how they work and the benefits they offer, you might be surprised at how accessible they can be. So how do DSCR loans work? Well, the key is in the name. Debt service coverage ratio. Essentially, lenders use a formula to determine property's cash flow is sufficient to cover the debt service, including the loan payment, property taxes, insurance, and maintenance. This means that investors can qualify for financing based on the property's cash flow rather than their personal income. And that's a game changer. For many investors, especially those with low personal income or high debt to income ratios, to be eligible for a DSCR loan. Investors typically need to have a minimum credit score of 660 and the property needs to meet certain cash flow requirements. The loan to value ratio is typically 80% or higher, and the interest rates are often competitive with traditional investment property loans. Let me share a story with you. I know an investor that was struggling to qualify for a traditional loan to finance his latest project. Before we dive into that, like, comment, and subscribe to the channel so I can continue to make videos. Here's a short video of a cute puppy to help convince you. Let me share a story with you. I know an investor who was struggling to qualify for a traditional loan to finance his latest flip project. He had a great track record, but his personal income was low, and he had a high debt to income ratio. That's when he discovered DSCR loans. By using the property's cash flow to qualify, he was able to secure funding he needed, and the project turned out to be a huge success. This is just one example, but there are countless others out there who have used DSCR loans to unlock new investment opportunities. But don't just take my word for it. The benefits of DSCR loans are clear. By allowing investors to qualify based on the property's cash flow, they can access financing that may otherwise be out of reach. They offer a level of flexibility and creativity traditional loans just can't match. And when used strategically, they can be a powerful tool for building wealth in real estate. In conclusion, DSCR loans are a powerful financing option for real estate investors. They might be right for you. Whether you're a seasoned pro or just starting out, it's worth exploring the possibilities DSCR loans offer. It's important to keep in mind that typically, first-time homebuyers can't qualify for this product, without an exception by most lenders. Having a good track record helps, and when obtaining loan underwriting, request available lease agreements and a 1007 appraisal, along with a secondary appraisal to confirm rental values are accurate. If you've had experience with DSCR loans, we'd love to hear about it in the comments below. And if you're new to the world of real estate financing, be sure to check out our other video on financing options for real estate investors. If you're looking for more mortgage tips and advice, be sure to check out my next video. You can connect with me at ross@impactloansllc.com if you or someone you know are in the market to buy or refinance a home. Thanks again, and see you next time on the channel.